Thank you all so much for being here. As the crowd continues to grow, I think I'm excited for the panel that we've put together today. The Future of Finance webinar comes to you every single month on the latest and greatest topics with the absolute best and most knowledgeable speakers and experts on those subject areas. My name is Phil Goldfeder. I'm the CEO of the American FinTech Council. We are excited that you've all decided to join us here today. And more importantly, I think one of our earliest legal advisory council members has been the great folks at Orrick. Previously, and dare I go into this without talking about Jerry Buckley and sort of the tireless support he has shown, not just our organization, but the entire FinTech ecosystem for the better part of the last 10 years with us, but obviously for so many more years before that. And so I want to thank Jerry and the great team at Orrick for sponsoring and for being here with us. Of course, Ian from our team, and I dare not walk off of this screen without giving due props and credit and love to Annalisa Gradner, who I had the privilege of working together with closely in a previous role, and excited to have her here today. I would argue one of the founders of banking as a service, embedded finance, or innovative banking. So this is going to be a really great conversation. I mean, obviously, this is a conversation that month to month over the last 6 months has evolved in probably more dramatic ways than most other things happening across financial services regulation. So excited to hear where we're up to today. Caroline and Katy from Orrick, obviously Annalisa and Ian are going to do a great job, and I'm excited to hear it myself. So sit back and enjoy. Caroline.
Thanks, everyone. Hi, thanks for joining, and thanks so much, AFC, for hosting us. This is going to be a great discussion about bank charter options and trends in 2025. I'm Caroline Stapleton. I'm a partner in Orrick's Financial and FinTech Advisory Practice. And today I'm joined by 3 panelists, and we're really fortunate to have all of y'all with us to share your expertise today. Katy, Annalisa, Ian, I'll let you each briefly introduce yourselves, and then we can jump right in.
I will start off then. So I'm Katy Ryan. I am a partner out of our DC office, advising fintechs across the board with a large focus within state licensing and regulatory, which has been, a primary focus for many years, especially within fintech and for many of our bank partners. So excited to be here to talk about chartering again, because that discussion kind of went a little quiet for a few years, and the resurgence within the practices is an exciting area to be discussing. So thanks for having me.
Annalisa Gradner. I'm the Chief Payments Officer for First Bank of the Lake. I've been in the space for, well, about as long as Phil said. It's probably been a little over 16 years. Nothing makes me feel young like saying that. But I started with Bancorp working on programs like Chime, Varo, Google Wallet, Simple, etc. Went on to Cross River, where I had the fortune of working closely with Phil and a fair number of others. And I've been with the bank now for about a year and a half.
I'm Ian Moloney. I'm the Senior Vice President, Head of Policy and Regulatory Affairs for American FinTech Council. I've been engaged with FinTech since about 2017, and spent some time at Cross River working in a similar capacity. And really with AFC's membership, we represent banks and fintech companies. So this chartering conversation is really important for us because we want to make sure that ultimately there's a level playing field and ensuring that all participants can have a good competitive market. So looking forward to a good conversation.
I'm going to share my screen to get our deck rolling. And I'll kick it off with just talking a little bit about why we're having this conversation right now. I'm assuming I'm not the only person, just based on the fact that I've already seen some participants that uptick a little bit here, coming in to hear about bank options for the fintech space. I don't think I've been asked this many questions about charter options since around 2018, 2019, when the OCC proposed the special purpose national bank charter for fintech companies. And at that time, if y'all remember, then Comptroller Joseph Oddie said the decision to offer the special purpose charter then was to help provide more choices in banking and more opportunities for businesses who wanted to provide banking services to do that on a national scale under a federal charter and be a federally regulated bank. That effort ran into some challenges, including litigation, and then was followed by the pandemic and an administration change. And so the conversation about charters, I felt really died down a little bit, and now we're seeing a resurgence in that. Ian, I know you're hearing a lot of questions, the same questions about charter pros and cons from fintech companies and others who are looking for other avenues for financial innovation. What's prompting the interest that we're seeing today?
Yeah, I mean, I think that's is a great question. It kind of is teed up by what you were discussing around, first in the first Trump administration, you had this interest in expanding out charters through that special purpose national charter, which was promptly challenged in court by New York DFS. And so it's not terribly surprising that there's again sort of an interest or an uptick in interest, given that, many of the same folks, at least in their form and view, are back in the White House and the administration. And so I think that the market is naturally reacting to some of the comments, and I think we'll probably get into this a little bit deeper later in the program. But some of the comments from the acting and nominated individuals for their respective credential positions, and then also just a general sense of that there's an opportunity to kind of re-engage in this conversation. And so we've already seen some, I would say I would categorize it more as a walk instead of a run to chartering, because ultimately there's a lot of pros and cons and a lot of challenges that still exist in that chartering space for those fintechs that might want to pursue a charter. And so, we've always maintained that ultimately we're agnostic to those that want to pursue a charter or not from the fintech space. And I think there's an opportunity to do so if it makes sense for you. I mean, really dollars and cents for you, to use that kind of pun. And you really have to look at your business model. But I think that's kind of what's prompting the interest overall, is the change in sort of the regulatory space, or sort of the re-engagement from some of those that have been previously involved on the government side, and then also some definite market opportunities.
And I think that what you said feeds right into the number one question that I'm hearing. Others considering a charter.
Caroline, you're out a little bit. Sorry.
Oh, sorry. Can y'all
There
hear
you
me?
Yes, thank
Okay.
you.
Which charter is right for me? And so that's because, oh, am I going out again, Katy?
You're good.
Okay, perfect. Thanks. And that's because there's a number of charter options that are on the table. The federal charter, and then of course a number of different options at the state level. So Katy, can you walk us through the options that are currently on the table as you see them?
Yeah, I will walk through the options, but I'm going to say that like there's different options in different areas that are kind of, just popping up that really have to do largely with what you want to do, what you are doing. So I can remember when we first started the conversation, many years ago in chartering, when you were talking about, what are my options? It was really, South Dakota has, a trust option. We would talk about the New York Limited Purpose Trust. A lot of them are really still around state opportunities. And I think what we're seeing is a resurgence around some of the existing state chartering abilities, as well as people really looking for and wanting a federal fix. But conversations around, Georgia's merchant acquirer limited purpose bank charter, right? So that actually has been out there for quite a while, and it allows direct access to payment card networks for entities that are engaged in merchant acquiring or settlement activities. You've seen, I think Fiserv just got one on April 30th, 2025. We see Stripe out there, kind of applying for, and it's really been a charter that's been discussed, I think growing discussion, but now is really a viable option for many fintechs. The other that's getting discussion is around Connecticut's innovation bank charter. So again, just like Georgia, these are not accepting retail deposits, and you're not obtaining federal deposit insurance, right? These are really for kind of like the uninsured bank charter. It's proved popular among fintechs, where you're really trying to get a power of a bank charter that allows for the eligibility with Federal Reserve master account and the ability to operate in other jurisdictions without multiple charters or licenses. and would be remiss to not talk about, the Utah Industrial Bank Charter, which affectionately, formerly known as Industrial Loan Corporations, still having the ILC, conversation. And that's really just another bank charter where we're seeing that they're exempt from the definition of bank for the purposes of the Bank Holding Company Act. So, therefore, they may be owned by non-financial entities. This one, FDIC insurance is required. It also means, though, that industrial banks may accept federal insured deposits. And then there's some limitations depending on banks, essentially like total assets. Like here, you're going to see Square's had one for several years. We see Edward Jones in the news that's applying for one. And I think going back to Ian's comment of, why are we seeing some of these new options in these new areas resurfacing? And it's largely driven by kind of market condition. I think the other portion, just going back to first question of, these are the options, but what else are we seeing? You also have companies that historically wanted to go a bank route. And I think that that's the other reason we're having a lot of these conversations now. Kind of, you gave the history and why certain, why we didn't really see the advent of the federal charter. Other options were then just based on administration, either extremely slow, and I know we'll talk a little bit more about that, or just really not becoming viable. And you had people pivot into kind of a state context. And now we're seeing folks see the opportunity to kind of come back in and kind of continue and really go a chartering route. So that's just kind of hitting on a few of the ones that we're hearing about most. But like I said, you still see a number of folks that have gone through New York Limited Purpose Trust, the Wyoming special purpose, and then discussions and new ones sort of coming up that I haven't frankly been focused on historically, like within Florida or in other jurisdictions. So I expect we'll continue to kind of hear different conversations about different charters and how folks are thinking about them, especially pertaining to what is it they want to do? Like, what do they want to have access to? How does it fit within business models?
One of the big barriers in the past insurance application, and what we're seeing now is statements from the FDIC's acting chair that are really supportive of de novo chartering generally. And you can see some of them on the screen here. I'm curious, Ian, I know that you follow this space more generally at the federal and the state level. Do you think that in the administration, we can expect to see more broadly support for increased de novo activity? And do you think we're going to see a push for federal charter, or do you think it'll be agnostic as to federal and state? What can we expect in the months and the years ahead under this administration?
Yeah, I mean, I think we are seeing sort of the start, and like I had mentioned before, it's acting Chairman Hill, but also I think acting Comptroller Rodney Hood, as well as current Fed Governor Michelle Bowman, who is, she's nominated for Vice Chair for Supervision, and they've all kind of had this chorus or this statement around, there needs to be an easier process or more efficient process around de novo chartering, and that's at the broader level. And I think there's a lot of discussion overall on the Hill as well with House Financial Services Chairman French Hill, who has made it part of the Making Community Banking Great Again pitch that's at the committee level around de novo chartering, ensuring that there's a robust banking system that has community banks involved overall. And so all of those different data points in my mind point to that there is this concerted effort from the administration to really encourage both broadly de novo chartering, but also specifically as it relates to fintech engagement. There's a focus on having innovation, and we've already seen some of the movements very early on with some purchases of some charters from fintech companies, actually engaging, kind of doing the SoFi and Lending Club route from back, a number of years ago. where they purchase charters. And I think there's an opportunity to see some of that again, and ultimately also see, whether it be federal or state charters, if it's state charter through either a member or non-member status of the Fed and the FDIC respectively. We're seeing some of that build up, and that really comes down to the conversations that were early on in the new administration, and then also sort of the change in tenor and tone from the previous administration. And so, I think much of what kind of the major challenges, to kind of touch on that part of your question, from the last administration were, somewhat political in nature, with some of the folks that were at the highest levels of those respective prudential agencies that were actually seeing the applications come through the door. There was an apprehension around engagement with specific types of banks or banks that look to specific activities. So I think one of the biggest examples of that is around Custodia Bank and their fights with the Federal Reserve Bank of Kansas City. And so, we're seeing again, while in the last administration, some of those folks ultimately withdrew their applications, so like Paxos and Custodia. You're seeing again sort of a re-engagement of interests in potentially going that route, and trying their hand again at an application. So it's been very interesting to watch, and I think we're likely to see more interest from fintechs that are positioned well to kind of go that bank route.
It's really interesting. And it kind of brings me to a question for Annalisa. You know better than anyone how prevalent the bank partnership model has become in fintech for both lending and payments. It's everywhere, and so many fintechs use this framework to operate their businesses. So I'm curious how you think not only an easing of regulatory scrutiny, but really if it becomes an administrative prerogative to encourage de novo charters, what impact do you think that will have on the bank partnership framework that we've all come to kind of know and expect from most fintechs? And what changes do you see, if any, to the prevalence of that model?
Sure. So, so first things first, the easing of any regulatory scrutiny, I always see as temporary. From a banking perspective, I try to keep in mind that all of our exams are retrospective. So what we're doing now is what's going to be looked at 2-3 years from now, perhaps less time, perhaps more time. So if there's easing now, there's easing now on whatever has happened in the past. That's not an indication of what's going to happen in the future, especially with regulatory exams. Also, we see a lot of shifting at more senior levels, and certainly in Washington, D.C., but you see a little less shifting at the local regional offices, and ultimately that's really the layer that's looking at banking a little more closely. So I would caution anybody who's excited about the easing of regulatory standards. And I would caution them that this is likely a short-term easing, and that anything that is done now will very likely catch up with folks, as soon as anything changes. Certainly, if we want to talk about the impact that this has on banks and on the model overall, it obviously reduces reliance on sponsor banks. I don't think that's a bad thing. I think there's a lot of demand right now for sponsor banks, particularly in the BaaS space, because of what's happened in the industry, because of the black eye that some institutions, some actions that folks have taken have created on the industry. It's made folks a little more reluctant to get into the space. Folks that were just dabbling in the space have decided to take a step back once they understood the amount of commitment that it would take to fully support a program and to support it compliantly. So it absolutely has will likely have an impact in the space, but I don't know that it's it's necessarily a negative one. I do think that it'll continue to push the industry to expand, to change, to offer new products in new ways. And I do think that's overall a positive.
So let's make this discussion a little bit more concrete about who's actually applying or what kinds of companies we think are most likely to be applying soon for a bank charter. Ian, I'll kick it back to you. Have there been recent successful applications? Are there, portions of the fintech industry you think are more likely to seek a charter? What do you think is the near-term impact of the opening up of this discussion and the administration's push for an increase in de novos?
Yeah, I mean, I think it's an interesting conversation, and in preparation for this panel, I went back and looked at some of the open applications, who's pending, who's withdrawn, and whatnot. And I think some of those folks that I had mentioned, that were innovative and kind of engaging in the crypto space before, like Custodia and others, they've previously withdrew their applications, but I think that's probably as far as an industry area is concerned, I think there will be more interest in kind of those more crypto-focused banks or crypto-focused entities pursuing a bank charter and trying their hand at it. Also, we've got now a number of potential IPOs and within the fintech space, and there might be some opportunity to, subsequently gain a bank charter or be seen as a bank. So like large entities like Chime, I think are a good example of where they are definitely currently not a bank, and they make sure that's very well known, but they're also doing a number of different activities through bank fintech partnerships that like facilitation of deposits and also engagement in other areas kind of across the board that I think lend themselves a little bit easier to, if you have a full suite of products, that you might want to have that cheaper deposit taking opportunity, being able to lend off of the deposits that you have and things like that. So really it goes back to, I think, what Katy was saying around business model. And so looking at the facts and circumstances of any given fintech, there's always those questions around, is a charter right for me? And so ensuring that they can, actually serve consumers, serve them effectively and have those economies of scale that make sense, ultimately, I think will be the biggest determinants for if they're going to pursue a bank charter or not.
That makes sense. And I think one of the major areas of concern that I hear a lot of, not just now, but in the past, and particularly when this conversation was happening in the 2018, 2019 timeframe, was around the amount of time it takes to get from conceptualizing a possible charter to actually getting approval, if you can get it at all. And just that investment, is it really worth it? Or are there other options that would take less time, particularly if there's, a rush to get to market with your product? So Katy, as our licensing guru, I thought I'd ask you, why does it take so long to get a charter? Or is that a misperception that, folks think is the case, but is not necessarily a given? And can you take us through a little bit? Obviously, we don't have time to cover all of the details of applying for a charter in every circumstance, but what that process is like.
Yeah, no, happy to. And I do think that the reality has been that it is a lengthy process that can, be within a year's process, right? Like often when we're talking about or kind of laying out the time frame, you're talking about kind of a 12 to 18 month process versus something, when we talk about some state approvals that you can obtain within 30 minutes, within 30 days. 30 minutes would be great. It's not 30 minutes yet.
Awesome.
30 days. Yeah, not yet.
AI, you never know, it's coming.
But I think, there's a couple things that go on there, which is the chartering process is not just a check the box activity, right? This is an actual review of the materials that you're pulling together, providing, and you are being approved for the charter. I think when you look at it on the flip side with respect to how we view some state approvals, it is much more a check the box exercise, and then you're more heavily examined, right? So you're getting in faster because the state is going to be able to provide additional time and resources to kind of check and see how you're doing on the back end. And chartering is not like that, right? I mean, the consistent elements that you see, like you've got an application form. We can all know that, but you're going to be incorporating jurisdictions. There's many things that are going to be kind of consistent across them, but then there's also the character and experience, right? The experience assessments for the control persons, the individuals who are actually running the business, is a very detailed process between, you know, the biographical information and financial reports. And we're all familiar with that as well if you're state licensed or kind of operating within bank partnership, but it is a, you know, it is a very fulsome process. The governance considerations, right? Your policies and procedures being built out and how those are actually performing, right? Do you have all of the right ones? Do you have procedures around them so that when you're actually being reviewed, that there's the ability to kind of not only see that you have like the prettiest policy ever, but that there's an understanding and implementation around your process that is actually meeting those requirements. Capital requirements, right? Spending a ton of time around the capital requirements. And I think the other portion within chartering that is a good part of the process, and you see again some states be more active in this, is like having kind of that before you're even submitting the pre-filing meeting, right? You're having a meeting that's talking about your business strategy, that's talking about how you're meeting capital requirements, that's hopefully setting you up for success, but it does kind of kick off even the conversation around whether or not, you know, you're even far enough along within any of these items to where you should be applying and you're getting feedback. When we get into kind of some of the differences among applications, I mean, some may require kind of a feasibility standard. Some may have residency requirements. You know, so for Utah, it's like residents on, you know, does require some Utah residents on the board. Wyoming, I believe you have to have the location. You need to have an individual there. You know, when we think about kind of some of the other requirements, so think you having even Connecticut up here, right? You've got your minimum capital requirements, application fees, the business plan. Like this isn't kind of that, you know, short paragraph of business plan that we can have some states accept. It is a robust, fully developed business plan in terms of you know, what activities you're performing, how they're falling under the particular charter. So it you know, the process overall is robust and requires a lot of detail and information up front. Whereas sometimes, and we'll talk about this in a second, of differentiating between one process over the other, you may have a little more flexibility within some of state licensing portions around that process. So, you know, the other portion within charters also, I think you will see right now, the other portion of time is where we have innovative products and companies are really trying to use charters in a slightly different way. I think that's the other thing that can also add to time, right? Because the regulator is trying to ensure that they understand what you're doing and that, you know, ultimately you understand and how it's actually fitting within the broader framework.
Yeah, and I think even before the pre-filing meeting, even before you take the first step with the regulators, understanding who the organizers are going to be is a question that's really important for the bank chartering process too, because there's expectations on the regulator side about the kinds of experience that are going to be in that organizing group. It's I would say in a really simplified way that it's kind of next level when it comes to the planning before the planning, if that makes sense. And you know, Katy, I don't know if that's consistent with your experience.
Absolutely, because I mean, if you get to the pre-filing meeting and you haven't done the planning, like you're not going any further, right? Like there's it's going to very quickly kind of fizzle. The work you're doing in advance to kind of even start that process, you're absolutely right, requires a lot of forethought, requires, you know, having the right people, having the right processes, and having those things kind of, you know, really fleshed out before you're even in the formal application process.
I think it can be really helpful in that organizing group to have one or more people who have strong experience in actually banking, you know, and not just the financial product or service or the technology piece, but to give regulators confidence that there's someone who understands the prudential regulatory side. And I mean, I think that really takes me to a question I have for Annalisa to bring you into what that prudential regulatory experience is. I mean, give us a dose of reality from a bank perspective. What can a fintech expect to change if it goes from being part of a bank partnership, being licensed through a state, to actually being a chartered bank. I'm talking about, the level of oversight, changes in regulatory relationships, other realities that folks should be aware of before really going too far down the road of taking this step.
Sure. I would say that first of all, it's going to boil down to priorities, and I think the easiest way to talk about this is to look at really a tale of two fintechs that I worked closely with at Bancorp, Chime and Varo. They went two very different paths. So Bancorp was the sponsor bank for both models initially, and then Varo decided to pursue a charter. It requires you to prioritize resources. Do you want to spend millions of dollars on marketing and growing your platform, or do you want to spend it on regulatory oversight? And unless you're prepared to spend 30 to 40% of the bank's resources or the fintech's resources on compliance, risk, and really the operational pieces that fall under both, it can be actually a lot more challenging than I think fintechs expect. This reminds me a little bit of my 15-and-a-half-year-old who is super excited to start driving because of the independence and bragging rights that can come with having a car. But I think realistically, those of us that have been driving for longer than 6 months understand all of the responsibilities that come with that too, and it's a lot less exciting. And I expect that fintech's path will be very similar. It's great. You're cutting out the middleman. You don't have to have the overhead and expense that comes with having that bank sponsorship. But guess what? Most of your team is going to be dedicated to either doing direct oversight or indirect oversight and providing that frontline support.
Well, and just one thing, if I could jump in, I think, a lot of people, the conversations have been around, okay, let's look at getting a charter, and they think, if they're not doing it right, I think the thought is, okay, we'll have access to cheaper deposits, we'll be able to do all the stuff that Annalisa was talking about, as far as like sort of that 15, 16-year-old of being able to, oh, I'm going to be able to finally drive. But then it comes down to, like, you've started now what is a long-term, a lifestyle. And a lifestyle as a bank is inherently different in many ways than a lifestyle of a fintech. And so, obviously responsible fintechs are operating with, good compliance requirements of their own, but there's additional scrutiny that does come from the bank, and then the liability framework, it rests with the bank within a partnership agreement. And so I think that's important, a very important consideration, that once you get the charter, you've almost started the rest of your life. It's not like, hey, this is, we're done with the hard part. I would almost argue, and Katy, correct me if I'm wrong, like the charter part is difficult, but it's only one part. And then the rest of the life is difficult in and of itself.
Yeah, absolutely. And actually, many folks, I think, are like, well, great, I'm going to get chartered and then I don't have to deal with the states at all. And like, that's not true. That's not true. And not only are you still dealing with the states, but when we're thinking about, what it looks like going forward, in some ways it can become even more complicated in terms of how you're dealing with the states. Right now you're seeing a lot of states that are actively looking at and pushing back around the exemptions they have for state chartered institutions, right? Or how they're even interpreting some of their exemptions around, especially those who may be in like the crypto space or in digital assets, of, well, we don't actually mean an exemption for that kind of trust. We mean it for this kind of trust, to where, if you're not asking and kind of overseeing the state piece, you may find yourself kind of in a worse off position. And I think you're really going to see, as states are concerned about, just market share, the ongoing regulatory hurdles and headache of monitoring in terms of how states are going to be really looking at these charters is going to be a very important and time-consuming part of whatever route folks go.
Yeah.
Sorry, I'm the downer of the conversation. I always,
Well, I think it's an important reality, and the graphic on the screen, it's not something that we created. This is straight from the OCC's handbook on bank supervision. This process repeats over and over again, periodically, indefinitely, for banks, and it's a lot of work to. This is from the examiner side, what goes into an exam, but it's a lot of work on the bank side to actually be responding to this. And for those who are in bank partnerships, you may already have some taste of aspects of this if you're asked by your partner bank to provide information in connection with an exam. But to be actually the direct relationship with the examination team is a totally different level of involvement. Annalisa, I don't know if you want to speak to that, but just the amount of back and forth questions and the frequency of these regulatory exams.
Yes, particularly in a more novel industry, the regulatory exams can be as regular as they choose for them to be. But yeah, absolutely. You've got to take into consideration the compliance, the AML, and how pieces and how labor intensive they can be to support transaction monitoring, suspicious activity monitoring, onboarding, KYC, audits, screening tools, model validations. We could go on and on in terms of the bank's requirements, and you can fairly easily follow why investment in new technology or exploration of new payments platforms can become deprioritized when you have regulators in your offices asking about, okay, well, how did you go about with this particular alert? What did you do with it? How did you follow up? And then you have potential consequences in the form of civil money penalties, as well as other kind of pretty extensive regulatory actions, should you do something incorrectly. So I do think that folks have a tendency to underestimate the amount of effort, time, and resources that it takes to be a bank, and how much that can divert your resources from your primary focus, which potentially is technology and growth.
Mhm.
Katy, we've talked a lot about what it is and what it means to be a chartered bank, but you've mentioned alternatives, and you talked a little bit about, you've alluded to, state licenses, for example. We've talked about the bank partnership model. Is state licensing a viable path for fintech companies that maybe aren't ready to go through the chartering process, the deposit insurance application process? Talk to us about what the alternatives look like and how they compare.
Yeah, no, so I mean, I think Ian alluded to this earlier, which is a lot of this really is fact specific. So, it's very possible as you're having the conversation and just trying to figure out what's the right route as you're going through and, kind of identifying where you want to be, like state licenses may be the right fit initially for certain regulated activity. And it can really be driven by one, what's the business that you want to be getting into, and what's your use case, right? So if really I need proof of concept, right, and I want to just make sure that I've got viable product, like state licensing is a good way to do that, right? Especially if it's a lending product, if it's something that can be kind of really confined within a state, which recognizing payments and money transmission, that may not have the same luxury. But there are instances, and this is why you would see a lot of like the innovation groups and the different innovation hubs to be able to be compliant but have a smaller way to kind of test. The other places being really around, are you ready for it yet? So I talked about this a little bit earlier of what we see on some folks is that they are obtaining licenses while they're building, right? While they're doing their policies and procedures, while they're really kind of ramping up that compliance function, while they're kind of even figuring out the relationships with the regulator. And there are many ways within a state licensing context that you can be making progress within, your licenses, as compared to the process for just needing every single license in hand or going through the chartering process around I need to have all of these things in place. I think the other portion you talked on, the bank partnership portion, is that just partnering with the bank will allow you to get to, faster to market in many instances. So there's still maybe a state component. You may have a lesser licensing obligation, but I think depending on kind of what you're trying to achieve, and I think, Annalisa, you said, what are your priorities? It really does also come down to what are your priorities and what do you want to be doing, that like really starts to kind of solidify what your approach may be. And in some instances, you'll see companies as they're building, they end up with all of it, right? I have a bank, I have money transmitters, I have, it because of the way that they're running operations. So, I've been drinking the state licensing Kool-Aid for 20 some years. So I'm agnostic as Ian is in terms of like us being able to help and identify the right path forward, but, do still see that there's viability within the approach. And many states would think that they have kind of a better way for innovation, recognizing though that the navigating 50 states plus DC and the territories is a significant regulatory hurdle as well.
So I think it might be helpful because I started off hoping that perhaps we would answer everyone's questions about bank charters and there would be zero confusion. I am guessing that now we have provided enough information that everyone is wondering, what should I be doing? Is this worth it? Is the juice worth the squeeze? Or is it really too much work to justify looking beyond the bank partnership model and possibly state licenses? So I think I'll put this to Annalisa first. But I think, it's a question I'll open to the entire panel. What are the questions that AFC members and folks in the fintech community should be asking in order to answer this question for themselves? Because I think, Katy, you said it, it's fact dependent. And so, in any kind of fact dependent analysis, the questions you ask are going to lead you to the approach that makes the most sense. Annalisa, what kinds of questions would you suggest companies ask, internally, ask their counsel as they're preparing to make this decision?
Sure. And I would say if I'm offering advice, I would say go for it. But do it right and know what to expect. One of the first questions you really should be asking is, can we dedicate a minimum of 30% to 40% of OpEx to risk, compliance, and AML? The second thing is I would underscore what Katy indicated, that the application process is lengthy, but the preparation for the application and really the ongoing process of supporting a bank charter is much lengthier. Do you have that amount of investment and do you have that amount of time? Additional advice and maybe a question, do we have the right people? If not, go out and hire the right people. Technologists are great. It's that company. But if you want to run a bank that is solid on the compliance side, I don't think I need to finish that statement, but hire the right people. And then I would say overall, do it right. The consequences for the industry, for the company, and even potentially for your end consumer can be dramatic and significant and long lasting. So I would say if this is absolutely a direction you're going in, then do it right, hire the right attorneys from the get-go, and then build your team in a way that can adequately support this.
That's such good advice, Annalisa. Katy and Ian, do you guys have any thoughts on questions that fintech should be asking themselves, or their advisors in making this decision?
Go ahead, Ian.
Sure. I think Annalisa, hit everything so well. In the chat, I have to call it out.
I know.
The guy who said Annalisa is on fire, and I agree 100%. Like, you have to hire the right people. You have to, and I see a true analogy to what we've been advocating for and what our members have been doing on the bank fintech partnership side. And that's, if you're going to engage as a bank or as a fintech in that partnership, you first have to think about what are you trying to accomplish through this partnership? And then, really go to your core competencies. And this is especially true, I think, on the bank side, is understanding their core competencies. If they're going to engage in a partnership, like, they need to make sure that it's strategically where they want to be, and they're not just dipping a toe. We've seen, and I think Katy and Annalisa brought up some issues with folks that did dip a toe in into bank fintech partnerships. And the same thing is true of the fintechs pursuing a bank charter. You can't dip that toe. You have to make sure it's a concerted part of your, and really the whole of your strategy, and that you have everybody bought in from top to bottom, and that you're doing so effectively. So ultimately, I mean, it's really focused on making sure that you're completely bought in, and that your core competencies match what you're doing. And yes, hire the right people.
Yeah, I would echo all of those things. I think the other portion is just the planning we've talked about, the technology and the engineers and things are extremely important. But as we all know, when in a heavily regulated space, it becomes even more important to, not only have the right people, but the right connections internally to ensure that you're issue spotting and in front of, things that could be problematic down the road if you're not catching and telling your regulator right away. Like, maybe you've got a little more flexibility in some places, but everybody's got the new best idea and we want to be everything to our clients. And so the planning and the education internally is also really important across, business, engineers, everyone, so that you can, put yourself in the best position to be compliant, but still be able to act quickly, nimbly, and be innovative. I think, folks that get that portion right are able to really scale, but in a way that is protecting the overall enterprise.
These are such good points. I'll add one, which is just to ask yourself and folks in your institution, if you understand what the regulator's broader expectations are for banks who have particular types of charters. There's a lot of baggage when it comes to banking. There is a perception by regulators that they are part not only of offering a regulated opportunity for a type of business to exist, but also that they are safeguarding a system that is essential for all industries to function normally in the country. There are certain types of charters that, including like a full service, full scope charter, at the federal or the state level, there may be an expectation that you're going to serve a certain community, where you're geographically located, or particular types of loans if you're focused on a given product that you are expanding that to, particular areas geographically or communities that there's an expectation you would serve. And so to ask questions that are aimed at understanding, for the charter I'm interested in, or if you're acquiring an institution or thinking about acquiring an existing bank, for that institution, what is the extra that comes along with it that might not have even occurred to me as part of my current business model? And as I'm thinking about the business model I'll be pursuing as a bank, what do I need to bake in, and what can be safely excised to accomplish my goals? So those are some other questions to ask up front, so that there's no surprises in or before the pre-filing meeting about the extent of the plan once you are or have acquired a bank.
That's a great point.
So do we have any questions? That we've gotten some great comments in the chat, and also I invite the panelists to say any final words. But I've reached the end of my list of questions. Happy to take any from the attendees, or any final words from our panelists.
Happy to start. I think hopefully we've given some things to focus on, but I think what will be very interesting, we'll see if and I know folks are extremely focused on, will we get federal charter? What does preemption then look like? And then I'm not going to have to do anything within the state level. And I just kind of go back to that same kind of comment to leave folks with, of like the planning and the understanding of whatever charter type you might pursue or not pursue, is to not forget the interplay of our very wonderful federalist society that still allows states to do additional stuff. So that's kind of the parting thought I will leave for everyone.
Well, I'll just say, parting thoughts for me are, I'm very interested to see, as this administration, and as really, the government kind of moves in, continuing its advocacy for de novo chartering, and whether there's going to be additional fintechs that purchase banks, they go the full chartering route. They look at maybe a narrower payments charter if that comes to fruition, or there's so many different options that are being discussed right now, and I still think that there's a very viable and vibrant industry in the bank fintech partnership model, and that will continue. So, I suspect in some ways it'll be the more things change, the more they stay the same, but there will certainly be some changes within the banking space.
Mhm.
I guess I'm happy to jump in there. I would just briefly say it's a fun and a constantly evolving space. But I would say proceed with caution. Let's see, like you're carrying a soup on a hoverboard, and then hope that your success will translate to the rest of the industry.
We have two questions that have come in from the chat. I'll pose them to the group, and I might weigh in on this first one too. The first one is, what is more optimal, having the bank by the fintech platform or putting the fintech into a bank holding company? And, I think you're probably going to hear from our panelists, but I'll just say it's probably very fact specific. Depends on how much control and the size of this. Is the fintech really just a product that's going to be used as one facet of the bank's broader business model, or is it really being run separately as its own entity? Does any panelist have a thought that's less fact specific and more general about this question?
No, I have an opinion, but of course I think what my opinion is.
Same.
I think that if you're already the bank and you're used to the regulatory oversight, injecting people into the bank that are strong technologists that already have a platform is much easier than going in reverse. I think it's easier for a bank to establish, and this may go to one of the other questions in the chat, but I think it's much easier for the bank to establish a more technology forward mentality than it is to go in reverse. But again, my answer is probably predictable based on where I'm at.
I think the other risk, though, just if we think about it in terms of purchasing the fintech platform, you're buying all assets, all liabilities, unless you're doing it in a different way. So if you have it, so just adding on to your thought, if like you're already kind of there and able to be regulated, like it gives you a cleaner path forward around kind of ability to operate, but without kind of taking on a lot of things that you probably don't want to have.
Annalisa, we want to know, how do you train and promote innovation to legacy bank employees as you execute the strategy? I want to know the answer to this also.
I would say it really needs to start top down. The board has to have that mindset, or at least be open to that mindset. And I'm going to sound like a broken record, but I will say bring in the right people. I think that it's not atypical for community banks to go into this space. Community banks have done things a particular way for a very long time, and you have community bank employees that have that mentality. Bringing in people with a different mentality that can continue to challenge each other and push each other to grow and change, potentially grow in the same direction, I think is the best way to do it. You need some of the traditional community bank mentality in order to continue to have success in that space. But injecting folks into that team that can say, oh, it's interesting you do it that way, but have you thought about potentially using this technology to simplify your process, or I don't know, using AI to respond to your emails. There's a lot of different ways that you can leverage technology and then insert it sometimes slowly into the existing bankers' workflows. But again, boils down to hiring the right people, bringing them in, and really having top-down support from the board.
Looking in at the chat, we have another question about the Puerto Rico IFE option. I'll probably say that's I view that as different than kind of the bank charter question. So I don't know that do any of our panelists have a view on this Puerto Rico IFE? Okay.
No, I would say that you would be looking really closely in terms of like definitions, which I know seems terrible. I mean, it's a you know, it should arguably be covered, but just thinking of state interpretations, again, just using New York Limited Purpose Trust as an example, where we've had states say, well, no, we didn't mean that one. I think the further away from like the exact language of exemptions in particular, and I know I keep kind of going back to the licensing portion, like this is one I would want to run down, more closely state by state to ensure that it was going to get you everything you wanted. And frankly, the conversations with the states and the regulatory agencies that are would be involved, they are more willing to have that conversation because they'd rather upfront versus kind of get into operating and not be able to like fully utilize an exemption you thought you had.
I love this thought, and I think it's a good thought to end on from the chat from Mark about training young professionals that have a passion for technology. I would expand that to training an industry that has a love for technology outside of fintech, including regulators. And we're seeing it more and more, but it's slow going to replace that fear and anxiety. It's not really fear so much as anxiety about not fully understanding what we can't do ourselves, particularly when it comes to technology, and on the regulator side, what might not have been seen or done before, with an interest and curiosity. I think we're headed in that direction, but I completely agree with the point, and I think it's really important across the industry. So hopefully more bank charter applicants will continue that trend, regulators as well. Thank you so much to AFC for having us, to the panelists for a great discussion, and to all of you who attended. Hopefully you got something out of this, if only a couple of questions to ask as you consider this really interesting topic.